Aloha, everyone. Joshua Hayes at BigWaveTrading.com. A week is in the book, and I tell you what, after a long sideways range in the SPY on Friday, we saw a nice rally and strong volume, pocket pivot point signal back above the 21 EMA. We still need to get above the 50 SMA. We have the 200 SMA to deal with, and that ultimately that downtrend line. But considering how bearish the short-term sentiment is, I thought Friday's move was very constructive. And I got to be honest, I've been telling members of Big Wave Trading for quite a while. Since this October low in the rally, one problem has remained, two problems really. The proper leadership that I need to see to get extremely bullish, and then what I call grade A setups. I had more what I consider grade A setups in this March rally, this July rally, than I've had this entire October rally. That being said, in the last video lesson I made, I believe I told you that I've had 4 to 5 times as many grade B signals during this rally than I had here, Well, following the end of this week, we can go ahead and up that to 5 to 6 times the amount of grade B signals. And there's a lot of good-looking stocks that are trending higher that are out there. And we're long quite a few of them. Unfortunately, on a swing basis, I don't have any size in any of them. Now, on Friday, I finally got a signal that's borderline grade A, grade B, and I am going to increase size in it. But that being said, there is still no reason to get aggressively bullish or long this market until we see a real bottom via retail panic selling. I prefer to see a VIX personally over 40. We are absolutely nowhere near there and have not hit it at all this year. So until I see a panic selling via retail, via outflows, a VIX over 40, or I start to see the Fed cutting rates at least 2 to 3 times for a potential Fed pivot bottom, there is no reason to get crazy with any new long positions in this market. But like I said, I've got grade B signals everywhere, and I have to admit, I'm seeing enough signs out there that there is a new and different kind of leadership that's emerging. And while I believe 2023 is going to be very volatile, and I do expect at some point next year us to at the very least retest these lows before the hawkish Federal Reserve Chairman right here and the hawkish ECB Bank of England right here, my ultimate low for SPY in 2023, based on historical measurements, not based on predicting anything, because predictions are useless. Based on historical precedents, I expected SPY 340 to be about where we bottomed. Hopefully, if you're bullish. Following the Fed statements, I'm thinking it's more SPY 320. And I don't think that we've seen the interest rate hikes filter their way through the economy yet. And I'm going to remind everybody that while we're seeing a different kind of leadership emerge, the Fed is still selling assets on their balance sheet. They are the biggest purchasers of securities in the stock market. When they're buying and adding assets to their balance sheet, that's good. When they're selling, it's not good. On January 4th, their most recent number came out, and they are still selling assets on their balance sheet. Also, stock markets, after a period of declining, do not like to bottom until you are in a recession and or after a series of Fed rate cuts. Now, we may get a bounce starting here in the market. The Fed is expected to pause their interest rate cycle in March. That's what the Fed Funds Future Prediction Tool at the CME is pricing in. I know that following their minutes, it stated that they do not see cutting rates in 2023, but the Fed Funds Futures market is pricing in a Fed rate cut in December 2023. Now, before they said that they were not going to do that, it was pricing it in for November of 2023. That has been moved to December But in December, the market is pricing in a 25 basis point rate cut by the Fed. But all that being said, we're still under QT. The Fed is still selling assets on their balance sheet. So should we be too bulled up? I don't think so. So keep that in mind regarding this analysis. All right, so a few webinars, a few video lessons ago, or two video lessons ago, during one of the weekend video lessons that I made publicly, I said what I think the market's going to do for 2023. And basically, if you just follow this arrow, I just think it's going to be a lot of this, and then that move down to 340, 320, and then a lot of this, and then eventually you start rallying higher. That's what I expect. If it happens or not, I do not care. I am open-minded. I have a game plan. I never beholden myself to whatever I think the market's going to do. If the market proves to me that it's going to do something else, trust me, price is all that matters. Price is all that affects my profit and loss statement. Price is all that pays. So with that in mind, we're looking at the SPY here. Not much here, right? QQQ. Not much there, right? I think the NASDAQ. No, it didn't. I don't know why I saw some people posting that the NASDAQ made a new 52-week low. I knew that it didn't, but I rarely ever look at the comp Q. But I don't see a new 52-week low there. Same with the NASDAQ 100. But we see how weak the NASDAQ is. You see how weak, the IWM. It's not that weak, but you still see that, it's lagging, just like the SPY. But here's where I'm seeing new leadership. And it's not new because this entire rally attempt off the October lows, the Dow Jones Industrial Average stocks have been leading. But as you can see, we're above critical moving average lines. The 200, the 150, the 100. They are not properly aligned, but we're above them all. And on top of that, we're now above the 9 and 21 EMA and the 50 SMA. This is a pretty good pullback consolidation re-rally setup. Now, I've always said, all I need is price. Then volume is secondary. Support resistance levels, moving averages, tertiary, these indicators, quadrary. But if we just look on the surface and just make things simple, technically TTM trend momentum's a red light, red light, red light, green. We're not super bulled up here. But that being said, you can clearly tell by looking at this chart, this is where our leadership is. Once again, compare the DIA to the SPY. Now, compare the RSP, the equal weighted SPY, to the SPY. This shows you that the big cap stocks, the big boys, are having a much negative and heavier influence on the overall market than what is happening underneath the surface. This is why during this period where basically the QQQ and the SPY has gone nowhere, the DIA and RSP has moved higher. It's also the reason why, while I don't have any grade A signals, I have 5 to 6 times as many grade B signals from the October lows than I did during the July and March lows. Where is this leadership really starting to show? Well, like I said, the Dow Jones Industrial Average, but it's starting to happen overseas. Look at EEM, emerging markets. Cup, a higher low, another higher low, and then a higher high from this higher high, a nice curl, and we're now above all of the moving averages. And we're green go, green go, green go, about to go green go. So we have EEM here, potentially, maybe leading us into a short-term uptrend. Is it the ultimate bottom? Is it all over? I don't know. I find it hard to believe under QT that that's the case. But like I said when I started this video, open-minded, always open to any and all outcomes. But when I look at this EEM chart, it's tough to be too bearish right now, at least in this area. And if you look at FXI, BABA, Baidu, PDD, you can see Chinese leadership is there. Not only that, look at KORU, South Korea. Very bulled up. Green, 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 green. I got 4 green lights for KORU. Now, these emerging markets, Asia, are bullish, but also in a quantitative tightening environment, metal stocks do good. GLD and SLV. Look at these charts. Now, I have a tough time buying basically, double top breakouts, and these have not been smooth. But that being said, there is leadership here. And I have 2 new long positions for everybody. And one of them is an extremely high quality stock that kind of is on that Dow Jones Industrial Average thing. And the other one is a gold stock. But before we go over those, I want to remind everybody, longer term, stocks like NEM, this is great in a long-term portfolio if you're looking for a long-term gold position. And I want to remind everybody, it's been a long time. But in 2010 to 2011, I had a huge position in GLD. Very, 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 very profitable. The same with FFIV. FFIV and GLD made over 50% of one of my retirement accounts, and it paid off. Would I do that right now? Absolutely. But I do want to show everybody that the leadership is there. Right now, if you're looking at the best of the best, DRD, listen, I don't see an entry anywhere here as it's making the right side of this downtrending cupish pattern. But I'm definitely on the lookout for a pullback squeeze setup for a potential future entry in DRD. The same can be said with AUY, which is a leader, CMCL, which is a leader based on relative strength and earnings per share, MMX, and I'm going to go over OR and look at a different telechart version, but I want to show you. You kind of got a downtrending cup with handle forming. We're in a squeeze. We're resolving out. 1, 2, 3, 4 green lights. Green is good to go. On the weekly, the higher time frame, I like that to be in confirmation. We've already come out of a squeeze, trending higher. Triple green is what I call it there. And we're triple green on OR. The other stock that's a long position, but it's actually an add position, TITN. You can see this base on base pattern. I want to show you that when it has a squeeze and it resolves out of it, triple green, resolving out of a squeeze, trended higher. Resolving out of a squeeze, triple green, trends higher. Super, super tight squeeze, resolved out of it with an explosive gap higher. Now we're in a squeeze. We're not triple green yet. This is going to turn green soon. This is going to turn green soon. Will we resolve and move higher? I'm not sure, but I really like the setup here. But I want to really quick show everybody what it looks like on my telechart version 7, which is what I usually use when making these decisions. So getting back to the gold leader, if I could show you my MarketSmith chart on these videos, which I show members in the private videos or the unlisted videos, you would see excellent earnings, excellent sales growth, 90 composite rating. It's a high quality stock. This is a downtrend line connecting these recent highs. You can see that it's piercing above it on heavier above average volume, pocket pivot point signals, and increasing green bop. I'm going to give it a shot on Monday, but I'm not going to give it a shot till it proves to me that it wants to move higher. 1280 is my stop, my buy stop, and my buy stop limit, also 1280. I'm willing to give this stock initially room to risk to 1177. In a bull market, I would give it all the way down there before ever touching my final stop. In this market, I need to see OR work immediately, or else I start implementing stops. And more than likely, my final stop will be at 1227. I don't want to lose money in this choppy market. I would rather save and keep my capital for when everything is clean and good to go. But that's idea number one for everyone. That's my game plan. If it gaps lower, never triggers and fills, and fails below this low, then there's no trade. I mean, you could buy it at the market if you want, but I need to see it trade above 12.79 first. And then there's TITN. Here's the first long signal. Do you see the hammer candle off the gap up support low on heavier above average volume with an increase in BOP? Remember what our TTM squeeze and our momentum indicators look like? Worked out immediately, never failed the final low, still holding that low, 37.24. You see here, higher low, still in the position, moving higher, pocket pivot point signal. Now we're breaking out above the downtrend line with the hammer candle over candle on heavier above average volume with the pocket pivot point signal, slight increase in BOP. And you can go back on the video lesson, look at what it looks like on Telechart version 18, see that we're coming out of a squeeze, or we're in a squeeze, getting ready to come out of it, trying to go triple green on the indicators, has a history of resolving higher every other time. I will add to my position at 41.62. That will be my buy, stop, and limit. And I am willing to risk to this low, the lowest low of this consolidation, before stopping out. Now, in this market, not a raging bull market where I would give the final stop an immediate room to this low, no matter what. No matter what. In this market, I have to see TITN start working higher immediately. If it doesn't, starts to reverse it all on heavier volume, more than likely on this signal, this low will be my final stop, 38.48. All right, everyone. Have a wonderful rest of your weekend. If you have any questions, comments, suggestions, leave them below. Thumbs up. Gosh, if you really enjoyed what you heard in this video lesson, give it a share. Hook a brother up. Also, friendly reminder, 2-week free trial is always available to everyone. Very, 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 very low cost for a membership to everything at Big Wave Trading. Day trading, swing trading, position trading, quarterly portfolios, long-term portfolios. We do it all at a very nominal fee. All right, everyone. I love you guys. Thank you for watching the video lesson. Aloha.